The Percept Expert Advisor is an EA from Forex Trading, and this video is for owners of the EA, and we're going to see if we can maximize our profits and figure out all the settings, the key important settings, and which one makes a biggest difference in terms of profitability. I'll be doing lots of backtesting and tweaking these settings based on the ICM Markets MT5 terminal on a raw account, and the leverage will be 500 to 1, and the period will be the past 2 years. So every single test that you see here will be based on this trades right here. And I call this my baseline test. First of all, we're going to run everything based on the default settings. Now, the default settings is on unique mode and low risk settings. So from a $10,000 account for the past 2 years, it would have made $5,000 in profit and about $500 in drawdown. Unique mode does mean that everyone does have slightly different trades, so I reran it for the second time and I noticed the profitability is about the same and the drawdown is about the same. However, there were about 800 more trades in the second run using the exact same settings, the default settings. So keep in mind, every time you rerun this backtest on the default settings, you will get slightly different results. And this is a summary of what we've got so far. 2 reruns of exactly the same settings, only small changes in the net profit and small changes in the overall maximum drawdown. In terms of the most important metric, the profit divided by the drawdown, much of a muchness, so about the same. Now we're testing the mid-risk settings where the load is 1%, and you can see the total profit is at 13,000, so about just over double the amount of profit you saw in the low risk settings. And from a drawdown perspective, we'll get the same ratio, just about over double the drawdown that we saw. Moving to significant risk, and you're seeing the exact same ratio jumping in both the net profits and the drawdowns. Now our net profit is 26,000 in the past 2 years, and our drawdown is about 2,700. Last of all, we've got the high risk, and up here I've got the screenshot of the only field that has been changed. All the other fields are reset to the default ones, and you can see a huge jump in total net profit. We're almost at $60,000 in the past 2 years, and our drawdown is 8,000, so the same ratio that you've seen before increased quite a number of times. We can see as we increase the risks from standard low risk up to high risk, our profits jump from 5,000 all the way up to 60,000, and our drawdown also increases from $500 to $800. But remember, the most important metric we want to see is the profit divided by the drawdown. And you can see it's reasonably consistent between the 9-10% mark, with the high risk one being the lowest and the worst ratio of a 7.5. So potentially significant risk, mid-risk might be better. But remember, this is unique modes. If I reran test number 5 again, we might get totally different results. Next, the deposit load. Now this one requires 2 fields in order to work together. First, you have to set the lot sizing method to lots based on deposit load, and for the deposit load percent, you can put whatever settings you want here. I've chosen 0.1, which is lower than the low risk settings, just to show you how it performs. Here the total net profit is $726, and from a equity drawdown you've got $72. So the ratio between the profit and loss again is about 10, which is what consistent to what we've seen before in the other risk settings. But this is how you would control your risk if you wanted bigger risk or lower risk than the low, medium or high that's already provided. If you want your lot size to grow as your account balance grows, then you would use dynamic lot based on equity or dynamic lot based on balance. And you need 3 fields populated in order to make this work. If you take a look at the settings I've got on the top here, for every $1,000, I am trading at 0.01 lot size. So my account is a $10,000 account. So the first lot size would be 10 times 0.01, which is 0.1 lot size. And as the account grows, you will see the lot size grow and increase as your account grows. Now you are starting to see an improvement in the number of profit versus the drawdown. This profit is $10,000, whereas our drawdown is only at 800. So the ratio between the profit to drawdown has increased to about 11-12. The maximum symbols at a time is fairly straightforward, which is the maximum number of currencies that can be opened at any one time. I went and changed the max symbols to 1 from 2, and you can see the total net profit has decreased from 5,000 to 4,000, so not that huge of a jump, and our equity drawdown maximum is at 422. If I change our max symbols to 10, you can see our net profit jumps to 6,000, whereas our drawdown hasn't increased that much. So max symbols equals 10 does seem to increase our profit without increasing our maximum drawdown. Hey, are you still awake? Come on, wake up, pay attention please. The next parameter is really useful if you want to preserve your capital and try and reduce your drawdown as much. The only one symbol if greed reaches this level, 0 is disabled and any other number is enabled. I've currently got mine set to 4, and this option allows you to temporarily reduce the maximum symbols at a time to 1 if an open grid reaches this level, which means if you have this one set to 4 like I have, which I find is the sweet spot, if you have 4 open grids, then it will stop more currencies being opened. This sounds great in theory, but when I backtested it with a number 4, it didn't seem to make a difference in terms of profitable and drawdown. You can see it's still at about 5,000 and drawdowns between 5 to 600, so not much of a difference that I can tell. The next field, disable trades on the same side of a currency. This one is designed to help you reduce your drawdown. So if there was a strong movement in one currency pair, you don't want 2 different currencies both having shorts, or for example here from the same Canadian. So only one will be in drawdown, not 2 different currencies. Unfortunately, my testing for this one didn't seem that great. Our profit was reduced to about 4,000 and our drawdown was reduced to about 4,000. So the ratio between the profit and the drawdown is still at about 10. Not much of a difference in terms of this filter. But this is backtesting. In forward trading, this filter might save you from blowing your account and from having huge drawdowns, but it will reduce your profitability as well. I was really excited to test the allow hedging field, and I was hoping it would make a huge difference in terms of reducing the drawdown, but from my testing it didn't. Here I've got allow hedging to true, and you can see the total net profit is still at about 5,400 and the drawdown has actually increased to 600, so not a huge difference in terms of profitability versus maximum drawdown. To illustrate how max floating drawdown works, I needed to use the high risk setting. So the lot sizing here is set to high risk, and I noticed in my previous test the maximum drawdown was 12%, and for this test I wanted to emulate a big drawdown happening, so I set my maximum floating drawdown to below 12%, 10%, so I did want to see these huge drops. And what you also need to do once you fill that in is use these other fields down here. So I've got close trades and stop trading for 24 hours. And I personally feel that that is the best option. There's a few other options here, like close trades and stop trading till the end of the day, or close trades and stop trading until the restart. I personally feel 24 hours is an okay period. The market does occasionally tend to have big, huge moves, and it generally calms down within 24 hours. If you really wanted to be safe, then you would use close trades and stop trading until restart, and then you would have to manually restart it. But I obviously can't test that function because it is up to your discretion whether when you restart it. So I'm going to test with closed trades for 24 hours. So for illustrative purposes only, which is why I chose 10% to show you that it does stop trading when it hits the 10% mark, and it continues trading 24 hours straight away. So you can see this jagged equity chart. However, in reality, you wouldn't be using such a tight max floating drawdown for such a high risk setting. If you really wanted to use a high risk setting, then you would use a much bigger number in terms of maximum floating drawdown to let the EA have a bit more breathing room. The next key field is not a backtest result, but the suffix. And this is a snapshot of a account I have. It is on the 8-cap broker. And you can see on this broker, the Forex symbols are a bit weird. It's got the .I at the end. The normal Forex pairs, you cannot trade on them. And you can see these in the light blue. So in the settings box, I need to put .I right here in the suffix. So it will pick up the fact that I have .I in my trading terminal. The last test that I have for the unique trades mode is the trading frequency, and the default setting is set to 6. I have put it to maximum of 10, so we want to see more and more trades, and this has seemed to increase the net profit from 5,000 up to 8,000. And you can see the equity drawdown maximum has not increased that much. It's only up at 660, so the ratio between total net profit and equity drawdown has been increased to about 11-12. Next, we've got standard mode, which is a huge difference in terms of the number of trades from 1,100 up to 1,600, and the profitability has also increased to about 8,000, and the drawdown has also increased relative to almost about 800. So the ratio between profit and a drawdown has increased slightly, looks to about 10.5 or 11. If you are trading your own account, it would be okay to use standard mode. However, if you're using this on an FTMO or trading for someone else or some other corporation, then I would definitely recommend using unique modes because you don't want to be flagged for copying someone else's trades. One more test I wanted to share with you based on all the lessons that I've learned today. So I put this one on standard mode, mid-risk, with a maximum symbols of 10. And you can see here from the chart, the total net profit was $27,736. And the drawdown, unfortunately, was quite high at $3,000. I'm worried that this video is getting a little bit too long and too dry. So I did a whole bunch of testing on the side, going through all the different settings again using the standard mode, and my findings were exactly the same as using unique mode. Most of the fields were very similar in terms of how they behaved compared to unique mode. This is all very cool, but what does that mean? So when we've got a whole bunch of different net profits and a whole bunch of different drawdowns, it's very hard to measure. That's why I've got this column on the right here, the profit to drawdown. So what we're looking for is the biggest profit versus the biggest drawdown. And you can see here, the highest numbers is the maximums at a time equals 10. And this is on the default settings of unique mode. The other one that seems to work quite well, again, is unique mode, where the trading frequency was set to its maximum of 10. So both the maximum symbols at a time 10 and a maximum trading frequency at 10 under unique mode seems to give us the best total net profit versus profit drawdown. But I understand some people like to see lots and lots of trades. So if you prefer the standard mode over the unique mode where there are more trades, then the default standard mode with no other fancy settings gives you a reasonably good profit to drawdown at 10.4. When I tried to play around with the standard settings, playing around with the risk and all the other settings I found worked, we have found the overall profit to drawdown wasn't that good. So all in all, these bottom three, test number 9, 14, and 15, seem to be the best. There are a lot more settings that I have not gone through in this video because I don't find that they are the most important in terms of having a huge impact in your profitability and a drawdown. Honestly, my personal opinion is you only need to worry about the two, which is the lot sizing method, whether you choose low, medium, or high risk, depending on your personal appetite, and your trading setup, whether you like unique mode or standard mode. Unique mode will have fewer trades and standard mode will have more trades. But that does not necessarily mean that it will be more profitable when you're looking at the profit versus drawdown ratio. All the other settings that I found make a small minor impact on your overall balance. So I personally wouldn't bother with them unless you really, really want to nerd out some more with your testing and your back testing. But my opinion, just worry about those two. Unfortunately, the ChatGPT and Bard AI filter does not work in backtesting, only in forward testing. And this expert advisor has only been in live for 4 days, so I won't have enough information to make a decision whether ChatGPT and Bard will increase your profitability. My guess is that you can have potentially a higher lot sizing, but you will definitely see fewer trades. And if you really like to see open trades, then maybe stick to the standard trades without the ChatGPT and Bard filter. I hope you found this video useful with all my backtesting results and my findings, and it wasn't too boring or dry. If you like my analytical style to robot trading, please watch this video right here for more nerdy stuff. And remember that this is not a recommendation to buy this expert advisor. I'm just sharing my personal experiences with this EA. Always do your own testing, analysis, and research. Thanks for watching till the end. See you in the next video. Bye.